Holy smokes, have you seen what's going on in the market today? Good gravy, the market's falling like nobody's business. But hold on. Is it time for you to panic? Or should you stay as cool as a cucumber or the other side of the pillow? If you want to know what you should think about doing, you sit right there. Hello, everybody. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always glad to be here for you. And today is probably a really good time to put out a video, especially seeing what's going on in the market today. The Dow this morning was down as much as almost 600 points. And a lot of people were panicking and wondering, holy smokes, what do I do? The VIX is up. So now we have a lot more volatility in the market. And that makes sense on a big down day. So we're going to talk about what's going on and how you should play this current market. And I'm going to give you a lot of data and a lot of great information about what's really going on behind the scenes. If you like this channel and you haven't already, please hit the subscribe button. Don't forget to hit the bell icon so that you'll be alerted when videos like this first come out. And nonetheless, please hit the like button and share this video out there with everybody else in your social circles to show what VectorVest is doing on over here. All right, let's get right into it. So the first thing you need to know about the market in a bull market, earnings is the engine that drives a stock market higher. As long as companies are making money, the market will still go higher. So I've got some data for you. And this is guidance from our VectorVest software. Now, if you're out there and you don't have the VectorVest software and you want to get this kind of guidance that we give every night, look down under the video in the description. You will see a link for a 99-cent trial for 30 days. Now, if you don't want to do that, you don't have to do that. I'm giving you the benefit of having that information at your fingertips at all times. I want you to specifically look at what I've got highlighted. The FactSet data. FactSet shows all of the companies who have reported earnings so far in this earnings season. According to FactSet, 88% of the S&P 500 companies have reported earnings. Now, this is the important part. 86% of those companies, out of the 88, have beat their earnings estimate, and 76% reporting revenues above estimates. Companies are still making money, and that bodes well for a good bullish market. Now, of course, in a bull market, you can have down days, as we're seeing today. So one day does not make a trend. I want to give you what's going on behind the scenes. Now, with this, we've got some concerns. Now, some of the concerns, and I've went out to some of the websites, the business financial websites. One says, investors have become increasingly concerned about signs of inflation lately, forcing many money managers to pare their positions in technology stocks. Technology stocks. And people have been asking me, why are tech shares going down? Growth stocks have traded lower for the most part of the week, with the NASDAQ Composite down nearly 5% for May, and that came from the Wall Street Journal. I want you to keep that in mind. Growth stocks have traded lower. Next one I've got from investing.com today, 5/11. However, on Tuesday, the CBOE Volatility Index jumped to its highest in 2 months to 23 points, and all the major S&P sectors moved in the red. That's investing.com. Now, why is that important? As markets move, volatility goes up and it goes down. Today, a big jump in volatility. And from CNBC, what started in technology earlier this month has finally moved over to the broader market, said Ryan Dietrich, Chief Market Strategist at LPL Financial. Although we are coming off a record earnings season, continued supply chain and labor shortages are adding to a potential inflationary pressures. Inflation is a big thing going on in the market. Now, when I talk about inflation, I looked at the talking heads this Sunday on TV, and Neil Kashkari, one of the Fed chiefs, said that the Fed has tools in place to, in effect, keep inflation under control. I'm very interested to see how that works out. One more thing. This is also from CNBC. Top Investor, and this is big news, Stanley Druckenmiller shared his concerns on CNBC Squawk Box this morning that also unnerved investors. Influencers will move the market. Keep that in mind. While Druckenmiller said he was still long stocks somewhat, the hedge fund manager said assets were in a raging mania and that the Fed and U.S. government risk endangering the U.S. dollar's reserve status by injecting too much costly stimulus into an already hot economy. So I wanted to put out what a lot of people out there were talking about, and now I'm going to put this into a more concise form of knowing what's really going on in the market by using a system like VectorVest. Now I'm going to get into the software. And the first thing I want to look at is, let's talk about what industries are the hottest industries right now. I'm going to go to our viewers tab, and I'm going to go to, actually, let's go to Unisearch tool. From the Unisearch tool, I did a 10-day price delta, 10-day price change on all of the industries that we track in the software. We track 222 industries. When I run the search as of today, as of right now at 2:32 in the afternoon, I can see steel, petroleum, energy, personal consumer products, mining. Look at all this petroleum in here. Look at the industries that are up double digits in the last 2 trading weeks. This is why I say having a system like VectorVest puts this information in your hands. So we know that there's an infrastructure bill out there. So building and steel is going to be on the rise, and these are our hottest industries at this time. Now, this is the place where people are making money so far this year. Or right now, let's talk about the difference between growth stocks and value stocks. I'm going to go to our viewers tab. From our viewers tab, let's go look at the difference between growth stocks and value stocks over the year, over the current year, so we can see where the money is rotating to right now, because there is a rotation. What I did is I went to the beginning of the year, this year, 1/4 of 2021, and I sorted our stock viewer by relative value. The relative value looks at a stock's ability to outperform the market, or in this case, a AAA corporate bond. Cast on a scale between 0 and 2, these are the companies from a growth perspective that should outperform the AAA corporate bond over the next 1 to 3 years. I've done videos on apps, on our Trending Thursday. We've looked at Moderna, Flagellant. These are all stocks that we all know that are growth stocks. Now, some of them are sell recommendations, but these are stocks that should outperform a AAA corporate bond over the next 1 to 3 years. So what I did here is I said, well, let's do a quick test of these 20 stocks over the last year from 1/4 until now. As I do a quick test, out of the 20 stocks, only 8 stocks are making money while 12 are losing. So these are the growth stocks from the beginning of the year. Which ones are still making money? Ecom, CTSD, mRNA, Novavax. Some of these stocks are up double digits, but only 8 winning stocks from a growth perspective. So now I said, let's go look at it from a value perspective. Stocks that consistently make money quarter over quarter, year over year. I sorted the list by relative safety. These are I like to call them the finger food of stocks. These are the stocks that people will run to. Google is in here, DHI, Salesforce, Cadence, Facebook, Monster, Old Dominion. These are good quality stocks that consistently meet or exceed their earnings expectations. I did the same quick test. Same quick test of those stocks. Look at this, 16 winners and only 4 losers. Money is rotating into value stocks, so the market's still moving higher, but this is where the people are making money. Look at all of the stocks that are up double digits, like Google, like Sale, like Old Dominion, like DHI, UFPI. Look at the United Health. These are the growth stocks that are making money so far this year, and money is rotating out of growth stocks and into value stocks. All right, so there's still money to be made, even though the market is down bigly today. Let's do this. Let's go look at our market timing graph today. Remember, this is our VVC or VectorVest Composite. What I'm looking at tracks the movement of over 8,700 stocks. This is true market move. Now, I did a video yesterday. I showed the upward trend in our VectorVest Composite where we had higher lows. Market definitely moving higher. Look at where we stopped today. This is today's activity. And look at the open candle. Look at the rebound that happened today. But where did we stop? Right at that trend line. Technical analysis works no matter what stock or indice you look at. Nice open day, nice rebound. We still did gap down and we didn't fully fade the gap. What does that mean going forward? Well, all that really means is that I've got a level of support from a technical standpoint. The fundamentals from an earnings perspective are still growing. The market is still in a bull market. And until companies start missing earnings, that's where the bear market begins. All right, now I want you to also keep in mind, we don't predict the market. I am following the trend of the market. And even with the down day today, one day does not make a trend. I am still saying right now, our market timing is still saying that some of our market timing calls are down, but I'm letting you know, just keep your eye on that trend line, whether it's on the S&P or the NASDAQ or whatever you want to look at. If you're a VectorVest subscriber, you can look at this VectorVest Composite to keep your eyes on it. Now, what am I looking for? If we break below that level of the trend line, well, the market could have much more legs to the downside. But with today's activity, the big gap down, the rebound for the day tells me that the market still has some bullishness in it. Let's see what happens. Keep your eye on the software, keep your eye on the market, and don't panic. Let the market come to you. Tighten the stops on the stocks that you have if you need to. That's what stops are for. And if you get stopped out, then you wait for another better buying opportunity before you jump back on board. But right now, as I talked about yesterday, are we in a bubble? Is the market going to crash? By looking at the trend of the market in that VVC and looking at earnings, that earnings information is important. As long as companies meet or exceed their earnings expectations, we're going to stay in a bull market. When companies start to miss that earnings or miss those earnings and revenues, that's when the bear market is going to begin. And believe you me, the Fed is going to do everything that it can to keep the market running higher. And I'm very interested to see what tools they have in place to go against a hot economy and inflation that's really running hot as well. So with that, folks, hopefully this has been something that has been useful to you. If it is, please comment below. Let me know what you think about this, whether you agree with it or not. I want to hear from you. Let me know what these videos mean to you. Next thing, I want to tell one more thing before we go. Thanks to you guys, we are grown enough that we now have a streaming channel. So these videos that we are doing here as one-off videos will stay on this channel, but we now have a streaming channel where we do Trending Thursdays, and all of our hot stock panels will be on our trending channel. And folks, thank you so much for helping us grow to a point where we now need 2 channels to keep you informed. Keep in mind, we do the research, you reap the rewards. Until the next time, folks, see ya.